Investing in stocks is an art. There's a lot more to it than just numbers. In fact, a big part of it involves with psychology. When you start to understand the mindset behind investing, the emotions, the fears, the patterns, it becomes way easier to make better, more confident decisions. In this video, I'm going to break down three topics, or we can even call them rules, that I personally find super important when it comes to making smart decisions when buying and selling stocks. Everything I say is not a financial advice, I'm just sharing my point of view. So, the first rule is know the company and believe in the business. When you buy shares of a company, you're not just buying a stock ticker or a line in a chart, you're buying a piece of real business. So, it makes sense that you should actually understand what the business does, and more importantly, believe in its potential. And that's because things will go wrong at some point. The CEO might sell shares, a competitor could steal market share, the media might spread fear, uncertainty, or doubt, or maybe earnings miss expectations and the stock drop 30% overnight. In those moments, the only thing that will help you hold your position instead of panic selling is having real conviction. If you have done your research and you truly understand the business and its long term potential, you will be way more likely to stay calm and stick to your plan. The second rule is plan ahead how much you want to invest. This rule might sound simple, but it's huge. Decide in advance how much money you're willing to put in a stock. Whether it's 500, 5,000 or $50,000, your position size matter a lot. If you go too heavy into one stock, you might find yourself constantly checking the price, feeling stressed out, and losing sleep whenever it drops. That's a sign that you have overinvested. You're emotionally tied to it, and that emotional pressure can easily push you to sell at the worst time. The feeling you want is peace of mind. When you have invested the right amount, an amount you're comfortable with, you won't be scared when the price dips. In fact, you might even be excited to buy more. So plan ahead, decide your max amount per stock, and stick to it. Don't go beyond what you're emotionally ready to handle. The third and last rule for today is hold for the long term. There's a powerful stat from JP Morgan that shows just how effective this is. Over the past 45 years, the S&P 500 went up in 34 of those years. That's about 75% of the time. So that basically tells us that trying to time the market or jump in and out based on news or emotions can work sometimes, but statistically, the longer you hold, the higher your chances of making a profit. In fact, historically, people who held stocks for 10 or 20 years had much better chance of success compared to short-term traders. So be patient and let time to do the work. So to conclude, those three rules of know and believe in the business, plan how much you're investing, and hold for the long term, they're not just ideas. I think of them of the foundation of building wealth through stocks. It's not about getting rich overnight, but it's about staying smart, staying calm, and letting your investment grow over time. I hope you enjoyed the video and I will see you in the next one.